Hello and welcome to AI Market News by LM. Before we get started, just a quick heads up. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Okay, let's dive right in. The big story today, September 24th, is this incredible tug of war that's shaping everything in the markets. I mean, on one side, you've got Wall Street kind of pumping the brakes, right? Pulling back a bit from those all-time highs because the Federal Reserve is sounding pretty cautious. But then on the other side, there's this just unstoppable wave of optimism that keeps pushing forward, and that is all about the artificial intelligence boom. It's really a classic showdown between today's economic caution and tomorrow's technological promise. So here's how we're going to break it all down. First, we'll look at the Fed tapping the brakes. Then we'll get into that roaring AI engine. After that, we'll unpack a tale of two currencies, see how geopolitical movers are shaking things up, and finally, we'll take a peek at the week ahead. All right, first up, the Fed puts its foot on the brake. You know, after that amazing, blistering run to record highs, US markets have kind of hit the pause button. It's forcing all of us to really think about what looks like a much more uncertain path forward. In this pullback, it's pretty clear across the board. We're seeing it in the S&P 500 and the NASDAQ. But here's the really telling detail. That 1.5% drop in the Magnificent Seven tech stocks. These are the very companies that have been driving so much of this year's rally. So yeah, when the leaders start to stumble, you can bet the rest of the market pays very close attention. So what's behind all this recitation? Well, a lot of it boils down to these words from Fed Chair Jerome Powell. He's basically walking a tightrope. He's worried that if he cuts interest rates too soon, he could reignite inflation. But on the other hand, if he keeps things too tight for too long, he could really hurt a labor market that's already showing some cracks. It really paints a picture of a Fed that's stuck between a rock and a hard place, with no easy answers. Powell's uncertainty really means the Fed's next move is, well, anyone's guess. And because of that, traders are absolutely glued to tools like the CME FedWatch tool. This thing basically reads the tea leaves of the futures market to figure out the odds of a rate cut. And as that sentiment shifts, sometimes day by day, we can actually watch those probabilities change in real time. It's like a window into the market's collective anxiety. And check this out. Here's a really fascinating little side effect of all this uncertainty. You'd think that uncertainty would mean chaos and high volatility, right? Well, instead, we've seen a sudden drop in interest rate volatility, and that has caught some really big players completely off guard. Some funds had these complex strategies set up to profit from turbulence, and they've actually been losing money because of the calm. It's totally counterintuitive and just goes to show how tricky this environment really is. Now let's flip the coin and look at the other side of this story, the AI engine. Because while the broader market is taking a breather, the AI sector is acting like it's in a completely different universe. That long-term optimism is just shrugging off any of the Fed's immediate concerns. I mean, look no further than the chipmaker Micron. They just came out with a ridiculously strong sales forecast, completely blowing past already high expectations. This is proof that the boom isn't just about software hype. The demand for the physical hardware, the nuts and bolts of AI, like specialized memory, is just soaring. Even after its stock had already rallied like crazy, Micron still delivered, and that's just pouring more fuel on the fire for the whole sector. And this isn't just a US thing. This optimism is absolutely global. The CEO of Alibaba is projecting the AI infrastructure market could hit a staggering $4 trillion in just 5 years. And they're putting their money where their mouth is, boosting their AI spending and inking a new robotics deal with NVIDIA. Their shares took off, attracting big-name tech investors. But you know, this AI gold rush is also raising some tough questions. Take this potential $100 billion investment from NVIDIA into OpenAI. Some analysts are looking at this and asking if it's a circular flow of money. The concern is that NVIDIA gives a huge chunk of cash to OpenAI, which then turns right around and uses that same money to buy NVIDIA's super expensive chips. Now, NVIDIA says the funds aren't for direct purchases, but it really highlights the complex and maybe self-reinforcing dynamics that are powering this whole AI boom. Okay, let's shift gears now and pivot over to the foreign exchange markets. We're seeing some really compelling stories play out in two of the biggest pairs, the dollar-yen and the euro-dollar. So the US dollar is flexing its muscles against both the yen and the euro, but for totally different reasons. The yen is getting weaker because there's a lot of talk about more government spending over in Japan. Meanwhile, the euro is taking a hit after a surprise drop in Germany's business climate index, which is a pretty big warning sign for the health of Europe's largest economy.
So it's not just the Fed and AI. Geopolitics are creating massive waves in the market too. World events are having a direct impact on stocks, and we're seeing it play out in real time.
A huge driver here is a really significant shift in tone from former President Trump regarding the war in Ukraine. Some recent comments sent a shockwave through the defense industry, and shares of major defense contractors just shot up. Not just in the US, but all over the world, from Germany and the UK to South Korea and Japan. And this chart, wow, it really puts that move into perspective. The MSCI World Aerospace and Defense Index is up over 50% this year alone. Just compare that to the broader global market, which is up around 17%. That is a massive, massive outperformance. And it's driven almost entirely by the stark reality of geopolitical tensions and rising military budgets. And speaking of geopolitics, here's another huge development. This one coming out of China. Beijing has announced it will no longer seek special treatment as a developing country in New World Trade Organization agreements. Now, this is a really big deal. For years, the US has criticized China for claiming this status, even though it's the world's second largest economy. This policy shift could actually remove a major roadblock in talks to reform the WTO. So, with all these different forces pulling and pushing on the market, what's next? Let's take a look at the key events we should all be watching in the week ahead. All right, pulling up investing.com's economic calendar, there are 3 things to keep a close eye on. Later today at 4:10 p.m. Eastern, we're going to hear from San Francisco Fed President Mary Daly, and that could give us more clues about what the Fed is thinking. Then, later this week, Germany's top economic institutes release a joint forecast that'll be crucial for the Eurozone's outlook. And finally, over in Japan, a 40-year government bond auction will be a real test of investor appetite there. So when we step back and look at the whole picture, the main takeaway is that we are in an incredibly complex market right now. There is no single simple story. Instead, we have these powerful, competing narratives. You've got the cautious hand of central banks, the wild optimism of the AI revolution, and the completely unpredictable impact of geopolitics, all pulling the market in different directions at the same time. And that, of course, leaves us with the big multi-trillion-dollar question. As all these powerful forces collide, which one is going to win out? Which one will ultimately set the direction for the markets for the rest of the year? We'll be watching very closely. Thanks for watching. Don't forget to like and subscribe.